Okay, so July brings a lot with it. It's the unofficial middle of summer. We've already gotten to the middle of summer. When you look at the holidays, the holiday that unofficially brought summer in was Memorial Day. And yes, some of you might say, well, wait a minute, Tom, summer just started at the end of June. It doesn't end until the end of September. Yes, but with the stock market, we're always ahead. We're always a bit ahead, and I like to be a bit ahead as well, looking at Memorial Day as our unofficial start and Labor Day as our unofficial end. So we're really unofficially right in the middle. And what July tells us also, when you look at seasonality, things have changed. Things have changed over the last few years, and it shifted us. It has shifted us now to where July looks like it comes in like a lion, with a lot of 50 to 100% when you take a look at all of the seasonality for the most popular stocks. Comes in like a lion first week of July. Even looks good going into the second week of July, which the second week of July, by the way, is the third Friday of July. But the last couple weeks, we start to see a change in the seasonal weather patterns as we go from the 90s and even 100%. You come into the third week of July, the third full week of July, look what happens. We drop into the 50s and the 60s. The temperature, the seasonal temperature starts to change. Out like a lamb, meaning we go almost full on bearish when we get to the end of July. So what does this look like for ETFs, and what does this look like for stocks? And I want to share that with you in this particular session. So this is the ETFs coming into today. And as you can see, they mostly end. And I blew this up for the important information that we see here. This is the raw data. I have not manipulated this at all. I've not resorted it at all. I've done nothing with it other than pull it. And so I'm sharing with you the ETFs. And you see ETFs, DIA, Dow Jones Industrial. We've got ITB, XHB, Home Builders, SPY, FAS, XLB, IYR, XLY, XLI, XLV. I thought what I'd do is we've talked about in past videos with you, we've talked about the holiday trade. We've talked about that with the SPY. You could probably look at the DIA and the QQQ and call it the same thing. I thought I'd bring up a different ETF in here. All right, one of the sector spiders, and take a look at it. But I want you to notice something. They're all green. They all have 90 to 100% accuracy going forward. But look at all their end dates. Their end dates are pretty much, the average ends at mid-August or before, beginning of August to mid-August. That makes sense when you look at the calendar. Now take a look at healthcare. This is XLV. So if XLV, if you look at it 9 of the last 10 years, it has moved higher. 2019, we saw a 2% pullback in XLV going forward starting in July. But in 9 of those 10 years, really 8 of those 10 years, you see that little tweak out there at 0.03. But look what's happened in the last 5 years. Almost 5%, almost 5.5%. Here's almost 3. Here's a little over 1, and here's 4.67. So the last 5 years have actually dictated some strong up moves in healthcare. And again, this is one of several sectors that we see going up for the month of July. First full week of July for stocks. And again, raw data. I just pulled the raw data and blew up the more pertinent information. You see MILI up there, MSCI, FICO, that's Fair Isaac, Bio, that's Biorad, and MPWR. Got several trades on each, some more, some less. The days are held, not long term, suggesting that if we like bullish opportunities, we need to be looking at getting out of those bullish opportunities by the time we hit the beginning and no more than the middle of August, all right? And so I see that as well. So let's take a look at one of these, get an idea what we're talking about here. This is MILI, okay? M-E-L-I, last 10 years. So its last loser was the beginning of the 10-year cycle. In every year since last 9 years, we've seen MILI go higher. However, we see a bit of a top out here, all right? Is this the best bullish opportunity? No, I don't think so. But it was at the top of the raw data, so I thought I would pull it just to share it with you and really to kind of let you know that whatever stocks you're looking at, they're seasonally bullish for July. Once again, we're seeing that tap out. And what I see kind of happening is the data has really started to change in the last couple of years, suggesting that the end of summer isn't in September like it used to be. The end of summer is now put itself forward, at the very least, by a few weeks. And I tell you that because when you look at the last day of July, this is what I'm seeing. Look at the red that just popped on the screen. I mean, it's hitting me like it's hitting you. And it's not just overall stocks. Dollar Tree is up there at the top of that list. There's Boeing, Applied Materials, Skyworks, and Nucor. Just these top 5. Again, raw data. They had not been sorted. They had not been sorted by anything more than the initial pop-up that came up from the data that I am looking at. Now, let's take a look at one of these. And I want to look at Dollar Tree. It was at the top of the list, the top of the raw data. Again, I haven't vetted any of this. I'm just sharing with you the top view of what I'm looking at as we go into the month of July. So as we get to the end of July, you see all that green on the screen? That's not bullish. That's if you took a bearish position in Dollar Tree in the last 10 years. You would have been wrong on 2017 because Dollar Tree actually went up. And it went up pretty high. I mean, it had a 14% move against you if you were a bear. But in every one of the other 9 out of the last 10 years, Dollar Tree has dropped. Meaning if you took a bearish position on Dollar Tree starting at the end of July, you would have been right last year, 36.73%. Okay? And that was the Biden administration, folks. You can't go and say, oh, tariffs are the reason why this is down. No, this was more, there's some inflation thrown in here too. But you can see the last, coming out of 21, 22, 23, 24, back, we were in the summer of love, weren't we? Just 4 or 5 years ago. And those summers brought bad news to stocks like Dollar Tree. So I wanted to share that with you. Again, in like a lion, out like a lamb. Is winter coming for the stock market? We had that buy the BBB, big beautiful bill. Buy that rumor, sell the signing. That could be part of the issue here. Again, today's news points. When you look at the buy the rumor, sell the news, you combine that with what's going on politically. You combine that with tariffs, which are a real thing that's happening. It's coming. Unless we get a change on Wednesday or we get another extension, more news points are bearish than bullish. When you look at the calendar, right, and you look at what's happening for the month of July, there's confirmation there. So, it's good to digest news. It's good to think about uncertainty. But if we thought about uncertainty at the beginning of the year and went to cash, we'd be in trouble. What are we doing? We are looking at seasonality, folks. And seasonality is what's gotten us the kind of results that we've had so far this year. And seasonality is telling us maybe we might not want to turn into all-out bears at the end of July. We want to be looking at taking some profits, and we want to be looking at balancing perhaps our bullish and bearish opportunities.